The Indian currency is now inching closer to that threshold, the psychological mark, 80 to the US dollar. And of course, we've been declining almost every day. Today, the Indian currency has plunged by 41 paise. It is at a record low, 79.36 against the US dollar. But it's actually the greenback that is strengthening, which is making all other currencies appear weak. And the Indian currency is no exception. You also have volatility in crude oil prices, further weakening the Indian rupee. The dollar index, which measures the greenback strength against a basket of 6 currencies, is up 0.89% at 106.07. Then, on the other hand, it seems like it will be another losing week for indices on Wall Street. After the long holiday hiatus, major averages on Wall Street have opened even lower. The Dow Jones is down around 600 points. The Nasdaq and S&P 500 also trading in the negative. There are concerns there about economic growth. It is, of course, hanging over investors like a sword of Damocles after that bleak first half of the year. And the outlook seems murky for the second half too. So all eyes are going to be on the Fed, the minutes of which will be released on Wednesday as far as the Fed is concerned, as well as June jobs data, which comes out on Friday, is also going to have a bearing on how investor sentiment sways. But looking at the kind of moves that we're seeing on the Indian currency, let's just connect with Abhishek Goenka, the founder and CEO of IFA Global, and also bring in Peter Cardillo, the chief market economist at Spartan Capital Securities, just to understand what's happening in the US markets right now. We're seeing those concerns of recession playing in the markets. Peter, how do you think these markets are likely to move now with all these added fears? With the minutes of the Fed now, what is the sentiment like over there, and how much further do you see the markets declining?
Yeah, there's no question that the sentiment remains very, very negative. Obviously, we're in a bear market, and the bear grip continues to intensify. Just before the long weekend, we saw the market have a nice rally. We began the month on the upside, only to come in after the long weekend with the averages giving back all of the gains and plus. So I think what we're seeing here is this fear factor that continues to weigh on the market. But I'm not all that pessimistic because next week we will begin Q2 earnings season. The big banks will begin reporting. Yes, there will be a lot of misses, but I think the key to the earnings season is going to be the quality of earnings. And so if the quality of earnings are not all that bad, then I think we could see some short-term relief in the marketplace. In other words, we could see a summer rally commencing. From a technical standpoint, the S&P is just around the lows of about a month ago, actually about 3 weeks ago. And so if we can rally from here, that would suggest that we'll probably have some sort of a short-term relief rally. One of the factors I think that's weighing on the market today is the strength in the U.S. dollar. The U.S. dollar is surging across most major currencies against the yen, against the euro. In fact, against the euro, it looks as though we're heading towards parity, and there's a good possibility that we could trade actually under parity. So this, is a plus and a negative. A plus because it contains inflation, a negative because it obviously closes down our exports. And so another negative worry that is attached to recession.
Mm-hmm. But let me talk about if there is strength in the US dollar, and if that is likely to persist, what does it mean for emerging markets and currencies here, especially the Indian rupee? Abhishek, there are several takes on how low the rupee could go. Some are predicting it will go way beyond 90 to the dollar. How much lower do you expect it to go from here?
It's possible, very possible, because remember that the U.S. has a very aggressive monetary policy, is an aggressive monetary policy. And so most foreign investors are pouring money into the United States in dollars and U.S. assets, not necessarily risk assets. By the way, speaking about risk assets, we see that yields, because they're not a risk assets, but we're seeing that yields are actually coming down. So the bond market now is no longer worried about inflation, but it's worried about how steep of a recession we're headed for. There are a lot of debates going on. Many economists are saying that we are already in a recession. I don't think so.
The real
I
fear
think,
right now that if the US goes into a full-fledged recession, what does it
well,
mean for India? I want to take that across to Abhishek. Just give me a moment, Peter, because Abhishek, we are seeing the rupee's value against the US dollar going down. Naturally, this is going to become more of a concern because of the inflationary times that we live in. So if that is going to be a problem, growth is slowing down for sure. How much further? And we've talked about the current account deficit. That gap has been widening in recent times. With the further decline of the Indian currency against the US dollar, we're seeing that much flight of foreign capital too. So all these factors are going to come into play. Do you expect the Indian rupee to further decline? And if the reasons are the strength in the US dollar, how much further do you think that is going to weigh on the currency?
So as you were saying that, of course, the current account deficit has been increasing every single day. The latest number that we saw, 25 odd billion dollars, if you look at those numbers, we are staring at a 3.5% CAD. That's around $100 billion US dollar. That's a huge number. Even our fiscal is not supporting. We might look at another 1% increase in the deficit, might hit 7%. So the overall balance of payment situation could be around $55-60 billion negative. And that's something that the investors outside are taking note of. Not only that, the cushion that India had was in terms of foreign exchange reserves that have hit all-time low of 593 in the recent past. And also the forward book has fallen down by around $15 odd billion. What is actually mattering dollar rupee right now is somehow there was hope that RBI has been intervening in spot futures, forward, swaps, NDF, every single possible avenue they have tried. But somehow with excessive dollar strength, tensions in Germany, recently if you see the natural gas, they doubled in 2 weeks. Now Germany is talking about not supplying natural gas to its businesses. Now these kind of environment which is getting created is hitting currencies like Euro big time, Japanese yen again getting very weak, which ultimately is creating impact on dollar index. And today that was the reason why the rupee depreciated, even though at 79, RBI was trying to intervene its level best. So I would say that a number 80 is just a number. If we are going to see this kind of numbers coming out from import front, if we are seeing this kind of
but there cannot be a decline in those numbers, right, Abhishek? As far as the crude demand is concerned, that is not going down. As far as coal demand is concerned, we need the energy at this point in time. That is not going down if we have to keep the growth momentum going. So those bills are going to probably grow, if not remain steady. If that is the case, does that mean that we are going closer beyond 80 and towards 90?
So it's difficult to say 90 because the average depreciation of the rupee for the last 10 years, if you see, is around 3%. And in the last 5 years, if you just ignore the recent depreciation, it's around 2.5% every year. Now, looking at that data, somehow, time and again, we have seen that whenever the rupee has depreciated around 8 to 10%, and I'm talking about the recent RBI regime, there has been some measures by the RBI to attract flows. And this time, I think the government and RBI both are very vocal, and they are coming out in open and taking steps to curb volatility. So I'm not looking at 90 as a number, but a stretch above 80 will not be a surprise if oil stays at $110, $115. And definitely, and the carry remains low at 3%. 1 year carry is around 3%. So exporters have no incentive to sell, and importers have all the incentive to buy. And in the last few days, what we have seen, the custodians buying have increased because of equity outflows, debt outflows.
Yes.
And the supply from the exporter side, people whom we talk, they're extremely lackadaisical to go and sell dollars. So I think that is what is creating the huge demand and supply mismatch.
Peter, if you can weigh in on this, how much variance within crude oil prices is likely to impact currencies within emerging markets and India in particular?
Yeah, there's no question that the high cost of energy is impacting emerging markets. It's impacting, major markets as well, right across the globe. But I think Biden's visits to the Saudis may produce some sort of supply. Now, look, let's understand each other that OPEC Plus has been struggling trying to up production. And the Saudis have, to a certain degree, raised production. I think there might be some sort of a surprise where the Saudis might actually open up the spigots here. And if they do, there's a good chance we could see crude oil prices drop as low as $90 a barrel. Remember that the high cost of energy is affecting most consumers, not only here in the States, but worldwide. And so at one point, the high cost of energy itself is going to bring down prices. So in the short term, while I think oil remains firm, I think there's a good chance that if we do get a surprise by the Saudis, that we could see $90 here in the near term, and that would probably take some pressure off of foreign currencies. That would probably weaken the greenback somewhat.
Yes, certainly. As far as the greenback is concerned, it has been growing in strength in recent times, perhaps as a safe haven that happens in these distressing times. But if we are going to see a reduction in crude oil prices in the near future, then perhaps it does take the pressure off, because you should see the size of the Indian import bill when it comes to crude oil, and it's substantial. It's where the maximum pain is coming from right now. But thanks very much, Peter, and thank you, Abhishek, for joining us with your perspective on the Indian currency and the pressure points at this time.